All right. So today's SPY was down 0.15%. And more importantly, I want you to look at the daily candles because we hit an intraday high. We broke yesterday's high and then the candle closed at the low of the day. So there was no bullish follow through after the bull breakout. And it does look very likely after the short squeeze, we could be due for a pullback. And now I want to quickly jump over to the Dow Jones because we did get a very large bearish engulfing candle on the daily chart. So bearish engulfing means we encompassed yesterday's high and then closed below yesterday's low. So the price action from high to low completely engulfs yesterday's candle, and this is a bearish candlestick. Now, usually when you get a bearish candle like this, you want to at least break the low to confirm we're going lower, but it is possible this is a pivot from a high. And the reason I bring this up in the Dow is because it's possible we come down here to fill this gap below 340, and we are going into the month of September, which is seasonality wise usually pretty weak. So I bring this up because I don't want you getting overly bullish just because we had the breakout. You need to continue to manage your risk at the breakout levels, and in the Dow, that's that level right there at 346. So now looking at the Dow, you can see very easily how this bearish engulfing candle could lead to a gap close below 340. And then jumping back to SPY, if you watched my weekly analysis, I said there was a chance on the weekly chart we bounce up to 450 and then still come down here and hit that support at 430. So as I just showed in the Dow with the bearish engulfing candle, how it could go lower and fill the gap, you could easily see how this scenario in SPY could play out to still go reach 430. Now don't panic and don't assume just because I drew an arrow to the downward direction that means the market's about to go through a major sell-off. This is just an idea I want you to be prepared for, and the easiest way to prepare for it is simply manage your risk on a breakdown below 448. In other words, if SPY starts breaking below 448, instantly just get more risk off until SPY can break back above it. If SPY dips below 448 and then goes all the way down to 430, you're going to be glad you reduced that risk. And if we dip below it and break right back above it, then you can just get right back in and ride that wave up towards the gap fill above 455. So what I'm trying to summarize here is there's only one level on SPY I think you need to pay attention to right now, and that's 448, and we're either above or below it. If we're above it, that's bullish, and if we're below it, look out below because we could be going back down to 430 to finish out this correction. It's completely normal during a correction to get a fake out bounce to trap the bulls right after the bears get short squeezed. And as I said yesterday, this is a bearish short squeeze because a lot of bears were piling in on this bearish engulfing candle. And then as you can tell, that was a bear trap because it instantly reversed into very bullish candles, which meant the bears had no time to escape and they had no way to get out of that losing trade. So they ended up getting short squeezed on that break above 442. So now that the short squeeze has largely played out, the next direction that would hurt the majority would be a pullback all the way down to 430 to hurt the bears that just got squeezed out and now hurt the new bulls who are jumping in on the rally and trying to catch a next rally, which could in turn mean they're about to catch a local high before we go down and finish out this correction to hit 430. So I spent extra time going through this scenario because I do think there's a very good chance this could play out. And while that doesn't guarantee it will play out, I at least want you to be very aware of this scenario. So on SPY, watch that level at 448. And as long as we're above it, it is possible we're going to fill the gap at 455. And then if we break through that gap, we have the next price target at 460. Below 448, you're getting more risk off and you're looking for strong support right around 444 and 442. And if we lose all of the support at the 440s, it's almost a guarantee we're going to at least 430. On the NASDAQ 100 triple Qs, we're at 0.3% today, and the triple Qs also tried to break out above that upper Bollinger Band, but as I said yesterday, there was a little chance we were going to fill that gap while it was outside the upper Bollinger Band, so that was where we found daily resistance. We didn't close quite as bearish as SPY in the Dow Jones, but as you can see, we did pull back from the highs, and we are still above the breakout level at 375. So just like SPY gave you one critical level to pay attention to, I'm going to do the same thing for the triple Qs, and that level is going to be 375. Above 375, we're still riding the bull, but below 375, you're getting a lot more risk off for a retest of the lower support right around 366 to 370. If we break all of that support, we're likely coming back down to retest the low at the support trend line and the previous low for a double bottom attempt at 355. And if we break that, we're looking for 347 in the gap fill at 333. So just to summarize, bullish above 375, but if we break below 375, instantly getting a lot more risk off. And then jumping back over to the Dow, just to quickly summarize, we have the bearish engulfing candle, critical resistance right here between 350 and 351. And with the bearish engulfing candle, if we break the lows of support and we break down below 346, there's a good chance we are going to fill that gap below 340 and test that support at the rising 200 daily moving average. So in the Dow, instantly risk off below 346, but there's no reason to panic. You can wait for price action to break that support support and then get risk off, or you can start to manage your risk around that resistance at 350. On the Russell 2000 IWM ETF, we were down 0.17% today, but again, a bearish candle closing well away from the highs and closing at the low of the day. However, we are still above the support at 188, so that is your critical risk level in IWM. Below 188, we're likely coming down towards 185, and if we break 185, we're retesting that critical support at 183. If at any point we lose critical support, we do have a gap to fill down there at 176, and the next bull breakout will be above 190, with the next price target higher between 194 and 195. On the ARKK ETF, we're up 0.32% today, and we're back above all of the moving averages for the second day in a row, but we have critical resistance at 44.5. If we could break above 44.5, we're likely getting bullish all the way towards that gap fill below 49. Critical support will now be 42, and as long as we can hold above 42, you can stay bullish. On the VIX, we were down 2.24% today, and the VIX is crushing now to where we were previously finding support, which is going to be in the low 13s. Typically, when the VIX is getting this low, this is the time to get cheap hedges. However, in a bull market, the VIX typically stays low, which you saw back there in June and July. So don't get bearish just because the VIX is low, because it does look like we're still in a bull trend. On Bitcoin, we're currently down about 5%, and Bitcoin is confirming the lower high rejection from the resistance zone between 27 to 28,000. And with this high volume rejection, it does look like we could be coming down towards this support at 25,000. I think Bitcoin's very simple right now because there's no reason to be bullish while it's below the 200 daily moving average. So if you're waiting to get bullish on Bitcoin, I would wait until we can close above the 200 daily moving average, and then you can jump in and ride the wave higher. As with crypto and Bitcoin specifically, it does like to go very low and a lot lower than people typically expect. So even though I have that price target at 25,000, I would not be surprised to see it go lower. On Tesla stock, we were up 0.46% today, and Tesla has the third day in a row closing above that resistance at 255. And as long as it's above 255, it could be heading to the next targets higher at 270 to 275, and then above that, the gap fill below 290. Just as I said before, be cautious and manage your risk right here at the breakout at 255, because it is possible we are due for a pullback. And in Tesla, if we break 255, the pullback would likely be down towards 245. On Apple stock, we were up 0.12% today, and Apple has that scenario where it was way outside the upper Bollinger Band, and I told you if we went up before we went lower, that would be an easy short, and right around that resistance at 189 was a pretty decent short today, even though I don't suggest shorting Apple because it's just a very bullish stock in general. However, if you're going to short it, now is the time to do it while it's overextended, and as it's pulling back, we're likely going to test support between 185 and 182, and if we continue pushing higher and we stay overextended, you're looking for the gap fill just below 191, and if we get to that gap fill while we're overextended, that's going to be another great shorting opportunity. So jumping back over the S&P 500, there is a good chance from the weekly charts that we were going higher before we were going lower to 430, so just keep that in mind, and that's why I spent extra time going over this scenario, because if you're aware of this scenario, you can plan for it, and if you can plan for it, you can capitalize on the price action, which is going to be that breakdown below 448. So as I always say, let the price action do all the talking, and this is still bullish until it's not, which means we need to see price action losing support before we assume we're going to lower prices. So watch these critical levels and let the price action do all the talking, and make sure your trade plan is prepared for both scenarios. That way there will be no emotions. You'll simply be following your plan when the time comes and the price action tells you which direction to trade in. If you want to come crush this market, consider joining Bang Trade Alerts or the Stock Channel Discord server, and you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.